Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Tuesday, the 8th of November. I'm Daniel Lam, your host for the podcast. So my team did an internal webinar yesterday, and colleagues on the other side were saying that there was ample noise level from the Hong Kong office. And of course, this was because of the exciting price action that the Hang Seng index has been delivering over the last 1.5 weeks. Now, I know that I spoke about Hong Kong China equities yesterday, but I will be expanding upon this topic today. Usually, when people see this kind of sharp up moves, especially after an extended sell-off, the first reaction was, is this short covering? Well, what we saw yesterday was more than short covering. By definition, you short cover if there were unexpectedly good news. Well, in this case, the government came out and reiterated upon their zero COVID policy over the weekend, and yet, after opening lower, the index digested the news and went up by almost 700 points intraday. That's more than 4% up move. The explanation is that investors continue to see potential reopening in China, or maybe at a more gradual pace, but the general direction appears to be clear to the investors, from evidence such as the sharp increase in the number of international flights and the resumption of sports events such as the Beijing Marathon and so forth. And it does appear that there is large size institutional buying on the Hang Seng index, which in hindsight has been occurring as the index was testing technical support below 15,000, with volume being 3 times of what we normally saw over the last few months. So what are the other key drivers for Chinese equities? Well, valuation, both on an absolute basis and also relative to the global equities, is at its cheapest level over the last 20 years. Positioning is very light, and policy support is still in the horizon. For example, from the Central Economic Work Conference in December this year. In terms of technical level, 15,600 is a strong level of support for the Hang Seng index. On the upside, resistance levels lie at 17,000, followed by 18,200. For sectors, the heavily oversold internet stocks seem to be at the center of attention. We noticed that a number of the bellwether large-cap internet stocks have found a base over the last 2 weeks and benefiting from strong buying volume and breaking above their initial level of resistance. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.